Jeffrey Currie is head of commodities research at Goldman Sachs. He suggests America is amid a new oil order. Part of the new rules is how exploration and production companies will react. In short, watch what they do, not what they say. What are the E&P companies doing right now?
Well, I think part of the rally that we've seen has been coming from the fact that these companies have made very aggressive announcements at containing the supply. EOG was an example of that last week. Now, I want to emphasize, however, that's good for the equities. Commodities are very different instruments. Commodities are what we call spot assets. They have to clear supply and demand today, not the expectations of supply tomorrow. Now, when we look at the equities, they can look forward. They're anticipatory assets. They should react to this. The problem is oil is rallying off this. And as oil rallies, and what we saw last week is something this market doesn't need, 7 equity issuance, 1 high yield issuance. This is going to exacerbate the problem.
Who's on the bid on oil? A lot of people, I get a lot of mail from regular Americans who say, look, the market's rigged by those guys at Goldman Sachs. Who's on the bid on oil?
When we look at it, you look at the retail investors, they've been the primary driver of this recent rally. And the fact it's not just been oil, it's been copper, aluminum, the entire commodity complex. It means that you have a lot of retail investors going $4 corn, $9 soybeans, $45 oil.
Is it a dead barrel bounce?
I firmly believe that. In fact, we just put out a sale recommendation on crude as well as copper right now, as we believe this thing's overdone.
What's your target?
Our target on oil is it can go all the way down to $39 a barrel, where we did it on Brent, $42 a barrel. So given that we're close to in the high 50s right now in Brent, that's a long ways down from where we are.
A lot of dynamics here. Jason Furman out of Harvard and the London School of Economics, helping the president as a chairman of the President's Council of Economic Advisors. Dr. Furman puts out a report that says your oil world and the benefits of it counteracts the global slowdown. Can that be true, that all that good benefit in America is enough to ameliorate the slowdown from Europe and Russia?
I'm in an agreement with that view. The question is just how large the magnitude of the impact is. But I think there's a couple factors that people are overlooking. One is people dismiss it because of places like China and Indonesia raising taxes as the price comes down. Now, that may not benefit oil demand, but it's going to absolutely benefit China, India, Indonesia, and these other countries because, nonetheless, it is a benefit to that country. It is a surplus to that country. So I'm under the belief that this is a positive benefit.
What is the solidity of OPEC right now? The distinction here is you have a very American research view where many others have a more global view, but I know you look globally with Steve Strungen. When you do that, what do you see for the future of OPEC?
Well, when we look at OPEC, we like to divide them into 2 groups. There is core OPEC, which are the Gulf states. They're in very, very well, strong balance sheets. I'm not worried about them. Then you have distressed OPEC, and that would be like the Venezuela, Nigeria, and so forth. Now, the problem is the distressed OPEC would like to cut production. Gulf OPEC knows it's not the optimal decision. Pursuing market strategy is more important. But you look at distressed OPEC and other countries that are demanding a cut. What are they going to do? They don't have the leadership of Saudi Arabia and the Gulf countries, which really puts them in a position they have no other option. In fact, somebody jokingly said to me, what are they going to do, bomb each other to take off the supply? It's unlikely to happen.